So now, Sine, if you'll please come and give us the main presentation.
Everyone can hear me okay? All the way in the back? So my name is Sine. I am both a CFA and a CMT, and I'm a professional equity research analyst. I'm also the director of research for a boutique investment bank called Capstone Investments. We're headquartered in San Diego, California, but in this virtual era, I actually live in Miami Beach and New York. We have folks all over the country, and we do equity research, sales, trading, investment banking, and so on. The CFA is the Chartered Financial Analyst, so that's analyzing stocks. So CFA is for fundamental analysis, so stands for Chartered Fundamental Analyst. That's one type of charter you can get. It's an advanced series of education. The other charter that I have is the CMT, which stands for Chartered Market Technician, and that's what we're going to talk about tonight, is technical analysis. When you hear people talk about analysis of securities, most of the time what people are thinking about, what people are talking about, and the traditional type of securities analysis is fundamental analysis. What does the company make? How do they make it? What's the market for this product? What do they charge for? What's the cost of making it? What's the cost of innovating? What kind of a PE multiple or earnings multiple we're going to put on that? That's fundamental analysis, looking at the fundamentals or the business basics of the companies. What technical analysis is analyzing the market for a particular security. And if you, so we'll jump in and we'll go through the philosophy behind technical analysis. But let me first go through and explain what technical analysis is. So the philosophy behind technical analysis. You're all familiar with the securities chart, right? And we'll go through the types of charts. You've seen charts in newspapers, and you obviously have a very sophisticated market lab here, so you know what securities charts are. So the philosophy, why look at the charts? Are they pretty pictures? Do they tell you something? Is there a way to read tea leaves for the charts? What's the philosophy? Why are we using what are called the technicals, or the charts, or the price movements to try and ascertain the future movement of securities? The reason is the philosophy behind technical analysis is that the market knows everything. So when everybody who has information on a security has to exercise that information by buying or selling the stock. So if the stock is going up, the consensus is that the stock is worth more because people are willing to pay more and more and more for it. If it's going down, the consensus of the information is negative information. So news is correctly anticipated in most cases by the markets, even prior to its official release. There's a lot of circumstances when the markets get information right. A company's going to miss earnings, and then runs going to go bankrupt. The stocks will start trading in the correct direction before the news is even officially released. So the markets are a great, it's like doing a survey or a poll. It's a great way, and the markets tend to be very, very accurate. The chart patterns, we'll talk about some chart patterns that are generally due to investor psychology. One of the differences between looking at stocks fundamentally is that the fundamentals are theory. What should a stock be worth? Technicals look at the real world. And in the real world, we're not, just think about your daily life, we're not always strictly analytical and fundamental. We're emotional creatures. I mean, we were evolved from cavemen. And I was talking a little earlier tonight, there have actually been studies by professors at MIT who wired up traders at Fidelity Investments, measuring their heart rate, perspiration, brain waves, to see when they make a trade, are they thinking with their intellectual brain, or is the caveman brain that they're thinking with when they go to make a trade? And especially in the markets that we've seen in the last couple of weeks, it's the caveman doing trading, or fear mentality trading, not the more logical, common sense trading. And we can see these patterns when we go through some of the patterns. The patterns occur repeatedly, and human psychology being what it is, you see a pattern form itself out once, and you see it recur in another security or in another era. Even going back, technical analysis goes back to the 1700s, and we see patterns in market after market after market, whether it's bonds or currencies, or commodities or equities, from decade to decade to decade, century to century, stock to stock. It's the same human emotions that we're looking at in these charts. Technical analysis analysis can be used for 8 freely traded markets. The key is freely traded. For example, a lot of currency markets, some countries will step in to prop up, their currency market, so that's not freely traded, so the technicals don't work as well there. But equities, bonds, commodities, currencies, domestic markets, international markets, the great thing about being a technician is you learn to analyze one chart, you just learn to analyze all the charts of all the different securities.